This channel is for educational purposes only. Please do your own due diligence before making any investment decisions.
Hi, this is Joe Rabil with Invest Like a Pro. So I get a lot of questions on individual stocks. A lot of institutional guys call. I get questions from subscribers that send me emails. And one of the things that I notice that it's across the board, no matter whether they're long-term professionals that have been doing managing money forever, or the guy that's just starting out, or someone who knows nothing about the stock market. I get questions all the time, and I've noticed this one thing, this one characteristic, which is they can't tell the difference between where you're if you're looking for a longer term investment, like when to get in. Like, is it too late? Is it too early? So I'm going to try and simplify and show you a way using a special chart that I have that I think can help you identify when you're getting in, kind of like at the beginning of a move, and when you're actually looking, if you're looking to get in something, it could be very, very late. Let's go ahead and get started. I just want to make sure if you like what you're hearing in these videos, I do suggest starting with the book. I have a book on a PDF format right now that I'm offering at a discount. So if you'd like to learn more about trend and momentum and multiple time frames, I think this is a good starting point. So what I want to do is use my timeline chart. Now I bring this up maybe like once a month on the Friday video for the S&P when I like to go through, and I've got the S&P up right now. I've got the spider up. And one of the things that I like to look for is what we want to have so the timeline chart is essentially, I've got a daily 18, a weekly 18. If you look up in this left corner, right, a monthly 18, a quarterly 18, and a yearly 18. All right. And what I like to do is I'm trying to find where all these lines are kind of in the same zone. They won't all be crisscrossing like this, but I want them to be kind of close together for the most part, right? Versus really far apart like that. Okay. Once we get these things really far apart, we know that the move has been exploited. We're trying to find the origination of the move. So just as an example, let's just go back and look at back in 2011, 2012 is when really everything, all of these lines got in sync. So this line here is the yearly line. This here is the 3-month or the quarterly line. And this is the 18-month line. All right. Those are kind of the ones that I think I want to be focused on. Now, you could take the yearly line out and look for the quarterly, monthly, and weekly, where all of these come together. This is really where this trend originated, was here. And we've had a nice run, and then went through a consolidation, didn't quite make it to the quarterly line, but look at how long of a run this has been. Okay. And this last deep bear market pullback, he did find support at the quarterly line again. So we got down there. It wasn't exactly what I'd call an optimum buying opportunity like we saw here, because it really isn't the origination of a new trend. We haven't gone through a long enough consolidation pattern to get all these lines to come together. Okay. Now, if we have that, now we have another potential long-term setup again. Okay. Right now we're just trading here, and it's not to say you can't make money. We have a move through here when we had a pretty nice move to the upside, ran into resistance. Now we probably come down. We'll have to see if we can hold this 18-month. Then maybe the weekly cups around and we can get a move off the monthly and weekly, which would be more like a intermediate term type of a pattern, right? I mean, not to say that you can't make decent money and it couldn't last for a little while, but when we're looking at these long-term patterns, we want all these lines coming together. All right. Now, we don't have the yearly line, but if we can get these other lines together, I think it's worthwhile. Let me give you a few other examples, because I do think this is really powerful. So everyone's talking about Lilly right now because they got this drug that's helping people with their diabetes, and now they got a new one that's going to be helping people lose weight, even if they don't have diabetes. It's supposed to be very effective. Well, I highlighted this stock in my reports way back here at like $90. All right. Why did I do that? Well, it's pretty obvious when you look at all these lines and see how all these lines are basically together. Look at them now. You see how far weekly's here, monthly here, quarterly here, yearly. You see how far apart they are? This is exploited is the word that I used. All right. That I like to say. I think it's exploited for a long-term investor. It doesn't mean that you can't play pullbacks to the weekly or, try and trade it or whatever. But if you're looking to put money in a stock that you think has real potential, and this is really what I'm trying to identify when I've got all of these lines kind of bunched together and then it starts to emerge. Now I try and find these, and this is where I will bring stocks up in my reports and the videos I do for my subscribers, where I'm really trying to zero in on the ones that look like they've got this sort of where all the lines are compressed and maybe they're going to start to expand, right? Let's look at another one. Look at Microsoft. I mean, so it's kind of like the market, but look at this origination of this trend. You see how these were all really wound really, really tight 2011, 2012, and then we finally broke out in 2013, and this was the kickoff move. And this has been one of the greatest trending patterns. It came back to the 18-month, came back to the 18-month, came back to the 18-month, finally gave it up in 2022. And now I would think that after going that long holding the 18-month, that maybe we spend some time disrespecting it. But so far, the trend is pretty strong. We did have a failed new high here. We're probably going to consolidate a little bit, but the momentum hasn't given it up yet. But just looking at what this did and where it originated, this is where we're looking to be a long-term player. Okay. Now, I'm not telling you to disregard all this other stuff. We want to look for the periods where the momentum is kicking in and all that. But if you see these where all of these lines are together versus where they're all apart, you see how 18 week, 18 month, look at how far apart all these are. This is where there's a lot of risk. Okay. So you want to be aware of that. Look at Google. Look at this breakout move in 2012. You see how all these lines are together and it's just emerging out of here? This is just a great, great chart. Now look at the two deep pullbacks. First, we had the COVID sell-off, the bear market and COVID. Look at where it found support, and then look at this bear market finding support here. So I brought this up on my show for Stock Charts TV. I do a stock talk show. And I talked about how important the 18 was. And I got a question from a guy saying, well, if the 18-month doesn't hold, do we want to go look at the quarterly line? Yes, absolutely. That is the way to go. The thing is that a lot of times it'll be in the midst of a bear market, and bear markets have very violent reversals off the low. It's not like they're going to spend a lot of time. This was pretty rare for this to spend this much time down there like this did. So, you do want to be aware of that. And then let's look at one more example, the NVIDIA move, right? So look at this. Can you tell where I would have been highlighting this? I mean, so probably not in here necessarily, although if you're looking at these charts, this might be where you really want to start to look. Now, I'd have to go back through my notes to see if this was something I was highlighting, but clearly when 2015 came around and this got going, look at this breakout move out of this monster base, and you're starting to get the little bit of separation. But this is where it all started back here in 2013. You see how these other stocks were back in 2012, but this was clearly not ready yet. These lines were still dropping. And then we got all of them to turn to the upside, really started to find support here, and then really just, kicked it into gear. Now, again, look at how we break down. It didn't quite make it to the quarterly line, but we had a double bottom below and then found support at the 18-month. But look at the last bear market drop here. Look at where it found support. Now, look at how far apart all these lines are. Is this a good long-term opportunity right now? I don't think so. All right. I mean, you're either doing it here in this zone here, potentially, you're trying to find the origination point. We don't have that. I don't know if we're going to get that in this stock, and maybe not for years. But use this to your advantage. If you can pull this chart up and do this, these 18, so each time frame, essentially what we're doing is each line is giving us the trend in that time frame. So if we can compress all the trends together into a closer range, then we know that once they get the smaller time frame gets going, then it starts to expand. All of these other time frames are going to expand. So it's the epitome of compression versus expansion seen just by using a single moving average in each time frame. So very powerful tool. I do recommend keeping a chart like this out. And every now and again, I mean, I used to, when I had more time, I would go through, I would literally take the S&P 500 and just start browsing the entire list and just trying to find all the patterns that are compressed. Now, I can see it. So this is the Lilly. So this is where I highlighted Lilly way back in 2017 coming out of this base. Look at this reverse divergence pattern that developed here. Look at the low ADX condition. Now that's on a monthly chart, all right? And then this is the breakout bar on the weekly after going through this long sideways consolidation. So this was one that I remember highlighting very, very clearly. And the crazy thing about this, look at this move. See how much, look at how what this has done relative to the 18-month. You see how this has held the 18-month? Now, the problem is, and we can all see this, right? We don't necessarily have to have that special chart, but we can see we're really extended away from the 18-month line. And even if we go to where we are right now, we know we've made a pretty significant move away from the 18-month. It's trying 18-week, and we know that's starting to correct. So don't have the quarterly line on there, but you can kind of see that this is getting pretty stretched and how it's made a pretty big move. Momentum is very, very good. It could keep going. That's why you could keep trading it. But if you're looking for to play the longer term trend, this really just doesn't fit. All right. Use this to your advantage. Let me know if you have any questions. Thanks.